Well, market gyrations continued, although the Dow Jones Industrial Average was down in the final moments of the session, dragged down, in fact, just as much by tough sledding in technology as by these interest rate concerns. And I got to tell you, I did not like the way tech traded, chip stocks especially, but Apple, there's a bigger and bigger question mark over whether we can restart the rally if tech is not leading the way. So that's going to be a focus everyone should be looking at tomorrow. After the close, several companies posted their results. 21st Century Fox posted revenues of over $8 billion, earnings of 42 cents, both ahead of consensus, as cable properties, Fox News and Fox Business, were stronger than expected, making up for a decline in television, which, of course, benefited from the World Series and presidential elections a year ago. Tesla results also largely in line, but the company didn't burn as much cash as Wall Street expected, and that initially had the shares moving higher. Meanwhile, Washington, D.C. had more influence on this session than economic data or earnings news. Yields popped after the Senate came to a potential agreement on the two-year spending deal that would blow the top off of caps designed to enforce some semblance of economic discipline. This in light of the nation's $20 trillion in public debt, which has doubled since the third quarter of 2008, resulting now in public debt being over 100% of GDP. It stands to reason investors should be concerned. And then there's the inflationary implications. You couple that with tax cuts, infrastructure. We're talking about a budget without guardrails. Keep in mind, over the last couple of weeks, one of the narratives that's popped up about this rally is Jay Powell. He's become an unknown. I'm not sure why he's become an unknown. I mean, let's face it, most Fed watchers have mostly regarded Powell as a dovish, centrist, or just outright dove, second to Janet Yellen over the years. He's never rocked the boat. He's always voted lockstep with the last two chairmen. Powell has been with the Fed since February 2012. Before that, the Carlyle Group. So you want to ask yourself, is this the man who's going to really roil the stock market? Well, let's ask Danielle DiMartino Booth, former Dallas Fed advisor and president of Money Strong, and Shelby Holliday, senior video reporter at the Wall Street Journal. Danielle DiMartino Booth, there was a vetting process. Jay Powell was picked because it felt like he would walk the party line, wouldn't rock the boat. Now, all of a sudden, people are wondering if he's a hawk.
Well, and with good reason. Charles, we had only heard him give a handful of speeches. He was not among those who was out on the speaking circuit constantly when he was a Fed governor. So it was just a matter of weeks ago that we had the release of the 2012 transcripts from the Federal Open Market Committee meetings. And all of a sudden, we discover a Jay Powell who was much more combative, much more articulate, much more understanding of the financial markets, which he should be given his background in finance and in private equity. And all of a sudden, you have investors saying to themselves, wait a minute, this guy knows exactly what he's talking about. He understands economic theory. He has not rocked the boat, but he was one of the very first people to advocate shrinking the Fed's balance sheet back in 2012. I think that they're understanding that they're not dealing with the Yellen clone here.
All right, well, here's the thing, though, Shelby. Wall Street was happy because we didn't have an economist, so they figured they didn't have to worry about someone who's thinking about theory, but has actually been out there at the Carlyle Group dealing in the real world and would take certain measures that perhaps someone who was classically trained in economics wouldn't take.
Right, and I think there's a fair point that there is a huge contrast with Janet Yellen. Most experts I've talked to do not think that that's why the market fell the day that he was sworn in. But we're used to a Janet Yellen who forecasts every move very carefully. Every word is very carefully chosen. And now we have someone we haven't heard all of these forecasts from. And, everyone's so obsessed with Fed speak. Now we don't know the speak. So there is a bit of a guessing game. But I see your point, and Wall Street's getting used to him. I also think the sell-off and all of the volatility this week was not just because of the Fed.
What else was it about?
Well, we had the jobs report. We also know that people are trying to figure out, we've had mixed earnings reports. Some are reading into it positively, some are reading into it negatively. But I think generally people are trying to figure out, is there a systemic risk here?
Really? I haven't seen that, but I want to ask you, Danielle, Shelby brings up Janet Yellen. Janet Yellen goes on CBS. She's talking about the economy and the market. Does she kneecap President Trump? Does she do? I mean, was it okay for her to come out in her parting shot or opening salvo? Because I think that might have played a role in this market turmoil we're in right now.
Look, she has an epiphany on her last day on the job that Wells Fargo is misbehaving. So she slaps Wells Fargo on the wrist as she's walking out the door. And then she hits the Sunday morning news circuit and says that commercial real estate and the stock market are overvalued. Is it any wonder that there was a flash crash on Jay Powell's first day in the office? I found it to be reckless on her part to be so open about her views after being circumspect to the point of being silent for 4 years.
Yeah.
You know, I think what really has markets nervous, remember back on October the 19th, 1987, Alan Greenspan had just landed in Dallas, Texas. He made a beeline right back to the airport. He was in Washington, D.C. the next day, assuring the financial markets that he would put a backstop to the economy and to the financial system. And what have we heard from Jay Powell? To his credit, we've not heard a peep from him.
Well,
it is not the Fed's job to listen to markets.
Okay, is it the Fed's job, though, to make sure we don't have an economic meltdown? That's a rhetorical question.
Absolutely.
We're out of time, and I will say.
You could also ask, is it the president's job to talk about the dollar?
I would also, well, the Mnuchin, okay, but I will say this much, though, Danielle. I hope we do hear from Powell really soon, not necessarily in a panicked way, but just because we are going through some bumps in the road. And in America, to your point, maybe we didn't know the guy. It'd be great to have a reintroduction. Thank you, ladies, both very, very much.
He'll be in front of Congress in a few days, Charles. We will hear from him.
Good, thanks.